These next 2 weeks in the markets are going to be absolutely critical, and I've got what you need to be paying attention to. I am Dr. Stock, Doctor of Education, and do you know what you call a dad joke without a punchline? Hilarious if you wait long enough. If you're not sure whether or not you got that joke, do me a favor, just say to somebody, knock, knock, and when they say who's there, just walk away. Don't say anything whatsoever. And so there's a joke without the punchline, and trust me, it's hilarious, usually for exactly one person, and that's the person who started the knock, knock joke in the first place. Let's move over into what exactly is so critical about these markets. First of all, I'm going to pull up the economic calendar because this contains some of the catalysts we should be looking for. We know that we got wrecked on Chicago PMI last week on Friday, made the market go nuts for a little bit before it finally recovered, and we'll show that in the charts. We have ISM Manufacturing today at 10 a.m. That could be a catalyst for us, along with other manufacturing information. Moving on from there to tomorrow, 10 a.m., the JOLTS Jobs Report. The market could actually be pretty volatile during this time, as a matter of fact, depending on which direction we approach it from. If we approach it coming in high, we could see an immediate dip following the release of that, good or bad. I guess it really depends. And then if we approach it low, we could see a spike as soon as that comes out. So you could sort of think about it as kind of holding our breath or releasing pressure. Either way, that's something we want to be watchful for JOLTS. And we want to see for the JOLTS job openings, we want to be watchful for the overall trend for what we get. And if these numbers come in soft for those job openings, and then also that would be combined with the unemployment rate that we're going to get as well. Those two together to see what exactly they're telling us is going to be important to watch during this time. So that's Tuesday. Coming up on Wednesday, we have ISM Services PMI. We also have ADP, so private employment change. We want to be watching for that to see if we get soft numbers there. And so we basically have two fronts that we're fighting on right now. One is that we want to see the Fed cut sooner. That can be bullish for markets, but we also want to steer clear of recession and those recession indicators that we could get that could start with weakness in employment. So we're kind of dancing that fine line right now, and I think that we see that also play out in the markets. Let's keep moving on here because I do have a lot of other things I want to talk to you about. Challenger job cuts. In the past, this hasn't been too much of an indicator for us as far as a catalyst goes, but it is still important to watch. Friday, June 7th, non-farm payrolls coming out for us. And again, we want to look for the weakness in the numbers, and we don't want to see significant strength coming out, although that could be upward pressure for the markets for those non-farm payrolls. The unemployment rate is going to be absolutely critical. If unemployment rate hits 4% or above, I think that's going to be significant downward pressure for the markets. If it stays 3.9 or even drops a little bit, I think that could be upward pressure for the markets. We're going to have to watch for that. If we move up instead of 0.1%, 0.2%, for example, even 4.1, which I don't expect that to happen. I think 3.9 is likely. I think 4% could happen to us. I don't know that we get 3.8. If we were to get 4.1, for example, that would be pretty massive, even though it only sounds like a little bit. I think there'd be significant downward pressure for the markets. We want to be watching for that as well. And then moving on from there into the next week, we have the Fed meeting on Tuesday and Wednesday. Also on Wednesday, we have CPI information, which I guarantee you Jerome Powell's going to have access to that for their decision. And so we're going to have to see what we get from that. Right now, Trading Economics does not show me a consensus or forecast. Let me refresh the page and we'll see if we can get some more clarity on that one. It looks like right now they don't want to show that, but this is something I'll do an update on, and we'll get some better numbers for you coming out up from that. And then Fed interest rate decision, same day, 2 p.m. We want to be watchful for that. And so the FOMC projections, economic projections also coming out at 2 p.m. At 2:30, we have Jerome Powell coming out and talking with us, and that can also be a significant catalyst for the market. So watch for a significant volatility to take place then. And then we also have more inflation information coming out on Thursday for the PPI. So lots of inflation information. We have the Fed coming out and talking to us. We have jobs data also coming out and hitting, and also manufacturing and services data. I think all of these are going to tell a story to us. First of all, there's one story about rate cuts. When exactly is the Fed going to cut the federal funds rate? That's one thing that we want to be watchful for. And the other thing is right now recession. And those two things, as far as the market's concerned, are kind of battling each other right now, and really being dynamic forces in the markets. So we want to be watchful for that. And then Friday, 10 a.m., Michigan consumer sentiment. Like I said, these next 2 weeks, absolutely critical in the markets to be watching those things. Let's put up the charts and see how the charts are also reacting to this news that we have up and coming. So this is a monthly chart for SPY And I've been talking about this because of its bearish divergence. And we're currently on a monthly basis have a bullish engulfing candle over the previous month, over from May over April. And so today is the first trading day in June. We'll see what exactly we get from that. It is possibly open higher. And if we break this top trend line, that is a bullish thing, just as that bullish engulfing candle might signal for us that we could possibly even break higher from where we're at right now. And that would break us out of the top of a rising wedge pattern that we're currently in. So we're going to have to look and see what June brings for us. If we got the sell in May and go away, it doesn't really look like that's what exactly we got. It looks like instead we're hanging around to see what the summertime can bring for us. And so moving on from there, going out to QQQ. Boom, there we are. So rising wedge pattern here on a smaller scale. This is the daily chart that we're looking at. We have a little bit of bearish divergence. As a matter of fact, if I go back to the SPY just for a quick moment, I'm sorry for jumping around. On SPY as well, tracking the S&P 500, we also can put a trend line on here and show that there's actually a little bit of bearish divergence also going on with what we have with SPY. So from that peak, heading down this way, that right now we still have a drop in momentum. And so we're currently watching the prices move up. That's the divergence that we're looking at, rising up with prices, slowing down with momentum. But so far we took a bounce off the 50 RSI. We also pretty much took a bounce off the 50-day EMA and SMA. Both those things are wildly bullish, and I think that explains a lot of why we saw the turnaround that we did, that we found support there, that we did not break through it. I think that would have made a different story. We did so in good volume. Could be a pretty green start to the week this week. Moving over from there into the Qs. Also looking pretty good, likely from NVDA, which we'll get to that in just a moment. Pre-market looking pretty juicy. So for the Qs, rising wedge pattern again, bearish divergence again, prices up, momentum down. And so we want to keep an eye on that to see what exactly we're getting. As a matter of fact, that might even be a better look right there for the most recent trend that we have with the RSI, that we could possibly see a further sell. If we see this break out of this lower trend line right here, that could be further bearishness that we see. We do have the 50-day EMA and SMA. Mostly I watch the 50 SMA for more of an overall trend sort of feel, more so than the EMA, which would talk more about the current trades that I may or may not be doing at the time. 10-year Treasury yield, by the way, definitely worth watching because we didn't quite make it to this top trend line. We started selling off. That we put in a bullish candle followed by a green candle followed by a red candle that wiped it back out again, signaling that we could possibly go lower. And we want to see us break down below what we have here for this broadening wedge pattern that we have happening right now. If we're able to break down through support on this one, break that 200-day, we could see a further bullishness in the markets there as well. So we do have significant number of bullish signs, even if there might be a bear movement coming up sometime within the next, we'll say 3 to 6 months. I think that we could see some significant weakness in there. But for right now, it's possible that we have those green lights. Speaking of green, I had a meeting last night after 9, and I was showing this consolidation pattern on Bitcoin that we were having, and I said it's possible that we start pushing up above. As a matter of fact, towards the conclusion of that meeting, we started to see us retesting this top line for resistance, and right now we're moving up on that. And even though we're early in the day, the volume is actually looking pretty decent so far. And if on Bitcoin we drop down to an hourly basis, ooh, check that out. The last hour we had that strong up movement, so from 8 a.m. to 9 a.m. Eastern time, because I'm on the East Coast of the United States, we had a nice move there. It is possible that we push up above 70,000. Maybe we finally see that 74,000 mark come out. We put in that new all-time high. This could be that next movement. We do have to break out over this line that we have up here for resistance right at about 72,000, because that's about the top of the trading range that we've been in for Bitcoin. Let me reset the chart view so you can see that better. And that you can see that top 70,000 is going to be that round number resist, that psychological resistance to the upside, but I think that we're going to smash through it today. Moving over to end phase, also looking good in the pre-market. I still have my price targets out there for us. 138 to 150, I think, is where it's possible to hit. We actually saw support coming out, and we actually retested it. So now we break above, retest, broke up again, retest, and now it looks like we're trading up again. I think that this could be that week that we see that 138 to 150 start to come into fruition if the market can maintain its strength, especially if what we see in the economic indicators out there, the economic news that comes out, if that comes out to be favorable, especially where this is concerned, end phase and other interest rate sensitive stocks. I'll get to Tesla next. If we see favorable news there, if we see sooner news of a rate cut from the Fed, really pulling that forward to within the next 6 months, I think that could be really good for solar stocks. So I'm going to be watching for that. recessionary news is not going to be necessarily all that great. So that could be something that also impacts the technicals that we see on end phase. But I do have those price targets out. We want to stay above this top trend line that I have right here, especially now that we've retested that support down at about 125. And that's held after 2 different retests so far. We really need to break up solidly above that 130 mark, and today might be that day that we do it. Moving over to Tesla. Tesla, there's this line right here that we can't seem to quite get away from as far as support goes. And then as far as resistance goes, it seems like anywhere from about 180 to 187. Let me actually slap a horizontal line on there for you. Really solidly breaking up above 180 would be something very favorable for the bulls out there for Tesla. And you can see we're able to peek above it a couple times, but always getting selling right back down beneath it. And now we are getting some of that upward pressure, even from the RSI, as evidence that we do have declining momentum, still up above 50. We want to keep that 50. We need to see some higher peaks and some lower valley or some higher valleys, so higher highs and higher lows coming into this to show that we're getting that momentum to start reversing back around for us. And right now we sort of have that sideways movement. And like I said, the bulls are gaining just a little bit of ground against the bears with no true confirmation yet. Solidly breaking one full candle close above 180. Could be that thing that shows, especially if we get some good volume to go along with it. So that volume confirmation can serve us well. Moving over to NVIDIA. NVIDIA talking about its next series. They put out the name for it, Rubin, I believe is what it is. So we have the Blackwell Ultra series following Blackwell, which Blackwell is being rolled out this year. Then we move into Blackwell Ultra next year. Then Rubin is the next pathway after that. And so in my mind, NVIDIA is really doing sort of like what Apple did with the Apple ecosystem, is that NVIDIA is developing an AI ecosystem for infrastructure for themselves, that they have the GPUs out there, that they also have the CPUs to go along with it. They have the NVLink. Then they also have their software services, and really getting people into that funnel and spiraling down into paid customers has worked very well for them. And I think it's going to continue to pay handsomely for them. And so I actually have some price targets on here. It's time that I put those on. So if you take a look on your screen, I have these visible now for you. At $12.50 is the price target that I have that we could see probably in the near future. Maybe it's after the stock split. Maybe it's just before the stock split. That's still about a 10% upside from what we see right now. Now, mind you, we have this broadening wedge pattern that I think that we're going to get a drop at some point in time. Maybe it happens near the split. Maybe it happens post-split. But we definitely would be watchful for that. The overall markets could definitely cut out the floor on NVIDIA prices too, but that doesn't necessarily change my price targets that I have. I do believe that sometime over the next 12 months, we'll see $12.50 come in. Now on a split adjusted basis, that's $125. And I also think sometime over the next month, we'll see that $1,500. And on a split adjusted basis, that'd be a $150 per share. Down here, that orange S that you see, that's that 10-to-1 stock split that we're going to get for every 1 share of NVIDIA that you might currently have. Then it'll switch over to being 10 shares instead, and so they'll be worth 1/10 the price. So it doesn't do anything to change the market cap, and not immediately anyway, of NVIDIA, but it is something that can be pretty bullish, is to make it a little bit cheaper, a little bit more accessible, and then also we'll have to look and see what other institutional buying we get, especially if it's something that gets introduced into the Dow. During that time, we could see some further buying. So for NVIDIA, got my price targets out there for you now. $1,500, I think, is that high price that we could easily see. No guarantees, of course, but I do think that it's definitely within the realm of possibility that we see 150 happen for us. And then also that 1250 price tag, I think, is much more likely that we see. Easier prediction to make because it is closer to the current price. So we could see a significant upside from where we're at right now. So a 10 to 30% appreciation from where we currently find ourselves in the market. So for NVIDIA, I'm still wildly bullish on them. There are some reasons to be cautious that are out there. I will say, with the ecosystem that they're developing for themselves, that I think that that's going to keep that demand around, and then there might be further shifting to the services side of things as maybe the margin from their hardware side starts to diminish. I think that we could find that balance come back into it. And so for the time being, I think the next 12 months are going to be very good to us for NVIDIA. And I also think the demand's going to hold out very well for NVIDIA. And I don't even know that any other companies are currently close to putting out competing hardware with NVIDIA. Basically, they seek NVIDIA alternatives when they can't get their hands on NVIDIA parts. So as long as that remains the case, I'm going to remain bullish on NVIDIA. And I do think that if we see this thing post-split drop down to the two figures, down from the $100 range down into the 90s, 80s, 70s, whatever it might happen to be, I think that sets up significant buying opportunities for us going forward. So on market weakness, not necessarily company weakness, that's a different thing, but market weakness that might cause those prices to pull back pretty darn hard, that I think sets up those significant buying opportunities that are going to be wildly profitable for us moving forward. So guys, I hope they appreciated the video. Hope you liked the information. If you want to see my buys and sells and what I'm doing, you can find that link for the Patreon down in the description. Also down in the description, you'll find a link for a technical analysis course. You can click on that, learn to take your trading game to the next level. As always, guys, I do appreciate your time. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.